New edition of the show Frontier Opening Bell for this week. I'm Temple Ashaju. Thank you for coming through and thank you for joining us on the show this morning. Ali Kansachu, the founder and CEO of Rich Management Frontiers in Nairobi, Kenya, is the one right here with us on the program this morning. Ali, thanks a great deal for coming through. It's an honor to always have you on the show, actually. So let's stay off with the market where Nigeria week to date was down by more than 1%, 1.60% specifically. The BRVM stock exchange was positive on Friday, more than 1%, 1.72%. And you have the Egyptian stock exchange rising by 1.08% week to date. In Kenya, week to date, the Nairobi Stock Exchange was heavily positive as well, 1.15%. And you have Johannesburg Stock Exchange rising on Friday, specifically by 1.35%. So Nigeria was the only bearish market on Friday last week. Thereabouts. Well, it's good to know. And that gives some opportunities for investors to come in again this week. East African markets now, where Kenya's Treasury publishes new finance bill for 2021. The Central Bank of Kenya has also appointed Kenya's Deposit Insurance Corporation to liquidate Charterhouse Bank Limited. Somalia restores diplomatic ties with Kenya after 5 months. Mombasa tea auction records slight increase at $1.85 per kilogram. In Ethiopia, the World Bank has signed an agreement of $200 million loan to help digitize the program that the Ethiopian government has been embarking on in recent times. Ali, you're the one to serve us our breakfast this morning, so let's hear from you on these headlines.
Thank you, Temple, and thanks for having me on the show. Let me start with something that you did not reference, but with the numbers out of the United States, the non-farm payroll numbers on Friday, which came out at 266,000 jobs, and the market expectation was for 1 million. It was the biggest miss I can recall, I think, in more than a decade. And it really caught everybody off guard. I think, that everyone had been expecting the US to be creating jobs at a much faster clip than what we had witnessed so far. And the net effect of that has been that we've seen bond yields ease a little bit, but we've seen a tremendous rally in frontier and emerging market currencies. The rupee is below 74, and you know what's going on in India. The rand, I think, touched 14 or close enough this morning. So it could be quite an important development, what we have seen on Friday, if the recovery is not as robust as analysts and investors had believed in the West. Coming to Kenya, the Treasury has published its new finance bill, as you correctly mentioned. It appeared on social media on Friday, and there was a lot of unhappiness with some of these ideas to slap on VAT on syringes, which everyone felt was very short-sighted in the context of having to vaccinate our citizens. It seems that VAT is going to be placed on foodstuffs, so milk prices, bread prices, all are going to increase by around 16%. Now, as you know, food prices have risen, I think, 31% on a 12-month outlook. They're at levels not seen since 2011. You will recall that the Arab Spring, in part, was triggered by high food prices. I think it was bread, freedom, and something else was the mantra of that revolution. So, Kenya, and I think like other African countries, is in quite a pickle. Heavily borrowed, high interest payments, some help from the IMF and the World Bank, but the citizen is going to have to do a lot of heavy lifting. So there's a lot of interest in this finance bill. The government has increased the size of the budget when a lot of people thought that would be imprudent, at least try and hold it steady, but they've increased it. So there's a lot of noise. There'll be a lot of interest around this. Charterhouse Bank is an old story. Charterhouse Bank was actually suspended from operations many years ago. And I think what we have going on here is the central bank is tidying up And essentially KDIC has been appointed to liquidate it. I think they just want to close that chapter. Charterhouse Bank was a small niche bank, third tier bank, and it really was very unlikely it was ever going to come back. Somalia restoring diplomatic ties with Kenya after 5 months. It's been quite a spat. Number of reasons behind it. One was the drawing of the boundary, the maritime boundary, where Kenya felt Somalia was taking a whole bunch of the sea from us. Obviously, the backstory there is really there are oil and gas resources in the Indian Ocean off Somalia and off Kenya. And I think what's interesting is that Qatar seems to have been the interlocutor here. They sent a high-level delegation last week, and they seem to have smoothed everybody's feathers and reconciled the two. However, disappointingly for farmers, Somalia keeps the ban on our cat, which has a big export market into Somalia. So people will be disappointed with that. The tea auction, I think tea prices are the only commodity price I can think of which is not going up. $1.85 a kilogram. Everything else, I was looking at the coffee prices, they've surged, basic food index has surged, but somehow or other the tea price remains in the doldrums, tea farmers will be unhappy about that. Ethiopia World Bank signing 200 million loan deal for digitization program. I think this speaks to the multilateral institutions looking through the current volatility in the political sphere, the situation in Tigray province and so forth, and continuing to support Ethiopia financially. And I think that's an important point to make in what remains a difficult time. The latest development over the weekend was the Ethiopian head of the Orthodox Church calling it a genocide in Tigray and then promptly being put under house arrest. So it's not normal. But the World Bank and the IMF seem to be keen to show some support for the government there.
Thank you very much, Ali, for helping us to dissect all of these headlines coming out of eastern part of Africa today. You talked about the tea auction being very low at $1.85 per kilogram. I mean, the point for me is that there's a price discovery because I'm a tea person. Thank you so much, Ali.
Sure.
Chima Okadike, the head of consumer analyst and head of consumer goods department at Ventiva Capital Management, joined us during the course of the show. Chima Okadike, thanks a great deal for coming through. Really good to have you this morning, this Monday morning. We'll have you to discuss the West African and Nigerian markets, the headlines coming out of this region now. Of course, Fitch retains FBN Holdings B negative rating on Central Bank of Nigeria's action. You have Hess Oil and Gas naming Osanyode Igieho as the Chief Executive Officer. Others to join the board as well. Lagos Commodities Exchange is to list Dukia Gold's diversified financial instruments. Sterling Bank first quarter 2021 profit after tax came in at 2.395 billion naira. 5 kobo per share dividend has also been projected or announced. 11 PLC finally exists as listed mobile oil company from the Nigerian exchange. That's the NGX, the newly demutualized stock exchange in Nigeria. How do you intend to chew these headlines today and trade them, Chima?
Thank you, Temple. Good morning, everyone. It's good to be here. So I think I'll start with the Double One PLC news. So it's below news that the company had intended to delist from the NSE or now NGX, like you said, for a while now. I think they put out the news around last year, around February last year. And so this has been in the works for over a year. And they even were able to refund or pay back some of their shareholders who opted to sell their shares at about 213 naira, which is quite positive for shareholders, but I'm sure some of the shareholders have opted to stay with them. Also, when we look at their financial performance, we can see that the company has gone through some, serious bad times, like many other companies anyway. So we can see that we could see the effect of the pandemic on their year-on-year figures. Looking at their latest Q1 figures, we saw that revenue declined. Although the company's profit after tax improved, the group's profit after tax declined significantly. I think it is. So I think it is. Can you hear me?
Yeah, we can hear you, but your picture is freezing. Okay, it's back fully now. So go on.
Okay. So I think it is a good one. So if you also look at the reasons why the company has stated that they are delisting, they want to be able to focus on revenue generation. Like I said, their revenue has been performing poorly. At least if you look at it in terms of Q1 21 and compare it to Q1 20 for now, you can see the decline. So they have said they want to focus on revenue generation and shareholder value, and to be able to have time or to be able to focus solely on that, they need to be free from all the regulatory requirements that listed companies on the NSC need to be subject to. So I think overall, given that we're seeing higher oil prices, we're seeing a although it's uncertain or it's shifting whether the downstream sector of Nigerian oil market has been fully deregulated. We see deregulation, we see subsidy coming back and whatnot. So overall, we think it should be a positive for the company, and I'm excited to see how this impacts the company going forward. I'd also like to talk on mostly around their dividend. I can see that they have declared a 5 kobo dividend per share. When we compute the yield for that, it's about 3%. Now, 3% is not bad for a sterling bank, but when we compare it to a GT or a Zenith, which is at around 12% or 8%, thereabouts, we can see that there's a lot more to be desired for the company. Also, when compared to the yields available in the fixed income market, which are really rising at this point, we know that the CBN or the DMO has started to embark on a rate correction from the previous year. And so I think a lot of investors would be demanding a lot more from these companies. We know that last year we saw investors flocking to the equity markets from the fixed income market because of the lower yields. Now things are beginning to correct and people are going back. So investors would need a little bit more reason to stay with you in the equity market, and dividend is one of such reasons. And I think that a 3% dividend yield may not be enough pull for investors to stay on with the firm. I'd also like to talk on FBNH's negative rating from Fitch. We saw, I think last week, if I'm not mistaken, the action that CBN took on their board. And while I think it has been kind of an open secret, I'm not exactly sure. The articles I've been reading, everybody has been saying, oh, it was a long time coming and all that. And, that CBN was right to do that. With the rating staying stable, it just means that investors or these rating agencies had already taken these inconsistencies into consideration in their earlier ratings of the firm. So because from what we have heard, giving related party loans that were not really well regulated, we should expect to see some impairments now that things have changed at the firm. But given that we're seeing that the ratings are remaining stable, it means that the expected impairments that we may see may have been already accounted for, in previous ratings, and that's why we're seeing a stable rating. Overall, I think that going forward for the firm, we should we should see stronger profitability, as we expect that their loans would now be more um, properly monitored and properly, assigned. So we should not see that affect their impairment expenses or profitability going forward. So I think we just need to wait and see how this will put for FPNH.
Very much. Thank you so much, Chima Okadike. Very well said there about FBN Holdings. Thank you so much. Let's move on to the Southern African markets, where Afrexim Bank backs a titanium dioxide plant with $200 million in South Africa. Saldanha Bay receives a 3.5 billion rand investment for port expansion project. RMB, that's Rand Merchant Bank, expects Moody's investment service to retain negative outlook on South Africa. Sibanye Stillwater's first quarter earnings soar by 78%, and Lucara Diamonds Q1 2021 revenues up by 56% to $53.1 million. Ali, let's come to you with these headlines. They show us some good numbers, good corporate headlines there, something that investors and retail players in the markets will really like to trade on today.
Absolutely. Let me just frame it in the context. Rand has been one of the top performing emerging market currencies this year. So you've actually made money in terms of if you'd invested in South Africa on the FX. And the stock exchange has been one of the top performing stock exchanges in the world and has also performed extremely robustly. So the macro environment, interestingly, has been very supportive for South African assets. Let me start with this RMB expecting Moody's to retain a negative outlook on South Africa. For a long time, everyone was very panicky that if South Africa got downgraded to junk status, it was going to cause an enormous sell-off. South Africa has weathered, these difficult moments in terms of ratings. International investors, I think, find themselves without much choice. Russia, you've got this geopolitical friction between Russia and the US. The likes of Turkey, you've got radical hocus-pocus monetary policy at the central bank most of the time. So in the comparison, South Africa has looked quite attractive. I think with the Chinese currency now hitting a 2018 high, you're going to continue to have a good tailwind behind South African assets. Then moving to your corporate stories, Afrexim Bank backing a titanium dioxide plant. This is in line with their mission for value addition. The titanium dioxide market tends to be in the Far East and in America. So it'll be interesting to see the detail behind what is being proposed here. Saldanha Bay receiving 3.5 billion investment for port expansion. Look, it's very interesting whether you go all the way up to Eritrea and Assab and you come down the coastline and you then come all the way to Durban. There is huge investments going into ports all across this African region. And South Africa, of course, being the most industrialized country in sub-Saharan Africa, continues to make those investments. But just to give you a flavor, here in Kenya, the Lamu port, the berths are already there. There was a big project that Magufuli kicked into touch for a $10 billion port of Bagamoyo. People are talking about that coming back on tap. You've got the president of Tanzania pitching the gas resource in southern Tanzania, just 120 kilometers from Palma in Mozambique. So you could see a lot of investment there. And then you've got Durban, one of the biggest ports on the continent, and you've got this story. So keep an eye on that. There is a definite port race going on.
Many thanks, Lee, for these analysis and perspectives shared there. Thanks a great deal. Let's move to the Northern African headlines, where the Egyptian Stock Exchange launches new bonds trading system in collaboration with the Ministry of Finance and, of course, the Central Bank of Egypt. Algebra Ventures plans to raise $50 million in the third quarter of this year. National Bank of Kuwait in, of course, Egypt posts net profits of 404 million Egyptian pounds in the first quarter of the year. This way, first quarter turnover was up by 2%. Twin Capital forecasts stable treasury bills rates in the second quarter of the year. Ali.
Just to state, Egypt is the destination market of choice for international investors. The carry trade, where people have gone long Egyptian interest rates and borrowed in dollars, has been one of the best performing trades for about 4 years now, since the devaluation happened, I think, in 2015. And the Egyptians are tremendous at dampening volatility and making investors stay for the long term. Therefore, just to remember, the T-bill side is extremely important. A lot of people basically buy Egyptian pounds, put it on T-bills and run the carry that way. So if Twin Capital is forecasting stable T-bills rates, I think that's going to be positive. Not only for the Egyptian economy, but also for the international investors who have parked tremendous amounts in that space, alongside Egyptian banks who also hold very big T-bill positions. It's interesting that they're looking to launch a new bonds trading system. I think because, really the concentration has been in the T-bill segment, and they're probably trying to now get more activity going along the maturity curve. So it'll be interesting to see how that bond trading system is going to work. I would definitely be keeping a close eye on that myself. And that's it. Thank you.
Thank you very much, Ali. Really appreciate it. Chima, let me come to you with outlook on the markets for today. And of course, we understand that the Lagos Commodities Exchange has now listed Dukia Gold's diversified financial instruments on its platform. How much of opportunity does that pose to investors, retail and institutional?
Very much, Temple. So I'll just start with the Dukia Gold story. So we know how gold thrived during the early stages of the pandemic, and even during the mid stages, people flocked to it while they were running away from the more riskier equity-based investments. So gold has always been a store of value, and regardless of how the other markets perform, I think it will continue to be. So I think it just provides for the investors, if that the assets is that the commercial papers are backed by gold. So I think it's a very positive one for the firm. We can see, I think around last year we saw a mining company in one of the Nigerian states, which started a program to help to increase gold mining in Nigeria, and can improve. So depending on success of this, we should expect to see more of these companies come forth and try to deepen the financial markets or the exchange markets. So I think it's a very positive one for the company and for Nigeria in total. For the equity markets, we've been seeing kind of lukewarm activity. I think it's based on the activities we've been seeing in the fixed income markets. Yields have begun to correct, and we are seeing very attractive rates auction-wise, that's primary market-wise, and even secondary market-wise. So I think that is what has been driving the lukewarm trading activity we've been seeing in the equity markets, and we expect that to continue given our expectations of rates direction in the fixed income market. Although we saw that Q1 results were released recently for many of the companies who sell on stock exchange, and many of them, I can speak specifically to the consumer goods companies, many of them released very positive results. And we saw how investors, rewarded them for their performances. So based on that, I think we'll still see some positive performances for these companies. But overall, I don't think it will be anything as near as what we saw last year, when we saw that the market closed about 50% up. Given that we're now seeing a return to fixed income market.
I'd like to say very much thank you to both of you, lady and gentlemen, on the show this morning. A little bit of skirmishes with your network there, Chima, earlier, but we really appreciate your thoughts shared with us on the show this morning. Chima Okadeke, consumer goods analyst with Vetiva Capital Management. Thank you so much for your presence and, of course, your analysis. Ali Kansachu, founder and CEO of Rich Frontiers Management in Nairobi, Kenya. Thank you so much for opening the week for us with all of your beautiful perspectives on the show this morning, and let's hope that our viewers are able to trade them to profit for themselves for the rest of this week. This has been the show for today. Frontier Opening Bell, thank you for being a part of it. I'm Temple Ashaji. Do have yourself a beautiful week ahead. I'll see you next time.